Welcome back, traders. In today's video, we're diving deep into one of the most recognized and reliable reversal patterns in technical analysis, the head and shoulders pattern. Also, we will cover 3 secret trading strategies based on the head and shoulders pattern that you can apply to enhance your results. Without further ado, let's get into this video. First, let's understand the structure of the head and shoulders pattern. It consists of 3 peaks: the left shoulder, the head, which is the highest point, and the right shoulder, which forms a lower high. The neckline connects the lows between these peaks and serves as a crucial level of support. The pattern is confirmed when the price breaks below the neckline, signaling a potential trend reversal from bullish to bearish. Vice versa, the same applies to the inverse head and shoulders pattern, which signals a bullish reversal. However, this is the textbook example, and real market conditions are rarely so perfect. In practice, the head and shoulders pattern often appears with slight variations. The shoulders may be uneven in height, or the neckline may be slanted rather than perfectly horizontal. Despite these imperfections, the core principle remains the same, identifying a shift from higher highs to lower highs and the importance of a neckline break. And the same applies with inverse head and shoulders. By focusing on the overall structure rather than expecting a textbook perfect setup, traders can more effectively recognize and trade this powerful reversal pattern in real time. Let's take a look on this example. The left shoulder forms after a price rise, followed by a minor pullback. The head is the highest peak, marking a stronger upward move before the price begins to decline. The right shoulder forms as the price attempts to rise again, but fails to reach the height of the head, creating a lower high. The neckline, connecting the lows between the shoulders and the head, is broken as the price moves decisively downward, confirming the pattern and signaling further bearish momentum. This chart illustrates a textbook example of the head and shoulders pattern, signaling a potential bearish reversal. The same applies with inverse head and shoulders. The formation begins with a downward move into the left shoulder. The price then dips further, creating the head, which is the lowest point in the pattern. After this, the price rises again before pulling back to form the right shoulder, which is higher than the head, indicating diminishing bearish momentum. The neckline connects the highs between the left shoulder, head, and right shoulder, acting as a key resistance level. The pattern is confirmed once the price breaks above the neckline with strong bullish momentum. This chart showcases an imperfect head and shoulders pattern, which can often be more practical and reliable for trading. I prefer such patterns for a few key reasons. First, the price made a clear change of character before forming the right shoulder, signaling a shift in market structure as the trend transitioned from higher low to lower low. Following the formation of the right shoulder, the price established a second lower low, further confirming the bearish reversal. If you've watched my previous video on price action secrets, you'll know that 2 consecutive lower lows are a strong indicator of a high probability trend reversal. In step 1, you need to identify a key level on a higher time frame, such as daily or 4-hour charts. These levels, often significant support or resistance zones, are where price is likely to react based on historical activity. Once the key level is marked, wait patiently for the price to retest it, as this confirms the level's validity and increases the probability of a strong reaction. After the retest, look for a head and shoulders pattern or the inverse one to form near the key level in the lower time frame. Let's take a look at this example. On the 4-hour time frame, we can see a significant resistance level that has now turned into support, highlighting a strong key level in the market. On the 30-minute time frame, an inverse head and shoulders pattern with an ascending neckline signals a strong bullish reversal. For a high probability entry, consider entering on a pullback to the neckline or the previous wick zone. Place your stop loss below the right shoulder for risk management, and aim for a risk-to-reward ratio of at least 1 to 2 to maximize potential gains. Another example: on your dollar, we can notice a significant support level that has turned into resistance. On the 30-minute time frame, a head and shoulders pattern signals a strong bearish reversal. For a high probability entry, consider entering on a pullback to the neckline or the previous imbalance zone. Place your stop loss above the right shoulder for risk management and aim for a risk-to-reward ratio of at least 1 to 2 to maximize potential gains. In strategy number 2, start by identifying a head and shoulders pattern on a higher time frame, such as the 4-hour or daily chart. Once the pattern is confirmed with a neckline break, wait patiently for a pullback to the neckline to ensure the level is retested and validated. This step increases the probability of a successful trade and avoids false breakouts. Finally, shift to a smaller time frame, such as 15 or 30 minutes, and look for double tops or double bottoms forming near the neckline. These smaller time frame patterns provide precise entry points aligned with the higher time frame trend. On the 4-hour time frame, we've identified a clear head and shoulders pattern. The price has recently retested the neckline, confirming this key level as resistance. To refine our entry and increase precision, we'll now move to a smaller time frame to look for a double top formation near the neckline. On the 30-minute time frame, we can notice a clear double tops formation. If you don't know how to properly spot these patterns, make sure to watch this video. The link will be in the description below. For a high probability entry, consider entering on a pullback to the neckline. Place your stop loss above the previous high and aim for a risk-to-reward ratio of at least 1 to 2 to maximize potential gains. Another example on EUR/dollar, we notice a clear inverse head and shoulders pattern. Also, the price has recently retested the neckline, confirming this key level as support. To refine our entry, we'll now move to a smaller time frame to look for a double bottoms formation near the neckline. On the 15-minute time frame, wait patiently for a double bottoms pattern to form. For a high probability entry, consider entering on a pullback to the neckline. Place your stop loss below the previous low and aim for a risk-to-reward ratio of at least 1 to 2 to maximize potential gains. To start this strategy, begin by analyzing the market structure on a higher time frame, such as the 4-hour or daily chart, to determine whether the market is in an uptrend or downtrend. Once the overall market structure is identified, look for an imbalance zone, which indicates areas where the price moved rapidly, leaving unfilled orders. These zones are key levels of interest where price may return for a potential reaction. After the imbalance zone is marked, look for a head and shoulders pattern for a bearish setup or an inverse head and shoulders pattern for a bullish reversal. These patterns, when combined with the imbalance zone, provide high probability entry points for the trade. Let's take a look at this example. The chart previously displayed a clear bearish structure, confirming a dominant downtrend. Recently, a slight uptrend structure has appeared, suggesting a potential reversal. However, after viewing the daily time frame, this upward movement is part of an internal structure, while the overall market direction remains bearish. Following the strong downward move, an imbalance zone has formed, highlighting an area of rapid price movement where unfilled orders are likely to exist. To align with the prevailing bearish trend, wait for the price to retest this imbalance zone. Once the retest occurs, shift to a smaller time frame to identify precise entry points for a high probability trade. On the 5-minute time frame, we notice that a head and shoulders pattern has formed. For entry, entering on a pullback to the neckline, place your stop loss above the right shoulder and aim for the previous key support zone or a risk-to-reward ratio of at least 1 to 2 to maximize potential gains. Let's take a look on another example. First, let's do market structure analysis. After forming a triple bottom pattern, the EUR/dollar experienced a strong bullish run to the upside. Recently, the price has created a change of character by forming the first lower low, followed by a break of structure to establish a second lower low, indicating a potential bearish reversal. However, upon reviewing the daily time frame, it becomes clear that this downward movement is merely an internal bearish structure within the context of an overall bullish trend. Currently, the price has retested the recent imbalance zone, providing an opportunity to refine our entry by moving to a smaller time frame for better precision. On the 5-minute time frame, an inverse head and shoulders pattern appeared, indicating a bullish reversal. For entry, entering on a pullback to the neckline, place your stop loss below the right shoulder and aim for a risk to reward ratio of at least 1:2 to maximize potential gains. Let's analyze this example. The market structure is clearly bearish, characterized by multiple lower highs and lower lows, indicating strong selling pressure. Recently, the price has retested a previous imbalance zone where unfilled sell orders are likely to be present. By moving to a smaller time frame, we can refine our entry points to align with the bearish trend, ensuring better risk management and trade execution. On the 5-minute time frame, we identify head and shoulders pattern. For entry, entering on a pullback to the neckline. Place your stop loss above the right shoulder and aim for a risk to reward ratio of at least 1:2 to maximize potential gains. If you want to know more about price action strategy, make sure to check out this video. I will see you guys in the next video. Peace.